Good evening, everyone. Time for another silver update. This is the 4-hour chart, and you can see that we're rallying here. I have drawn in the one support line that goes back to January, which was our high when we touched a little past 31. I'm starting to think that we're not going to test that. One of the reasons is because these two bottoms here look like they may be it for the bottom. This bottom here has a lot of volume, and then this bottom here has a lot of volume, and it looks a lot like a technical bottom. Not going to bet on it, not going to forecast that it's absolutely the case, but it's starting to look like it. If that is the case, then we want to do a swing rule from here. And our swing rule on the top, we don't need this to be straight, so I'll just make it crooked. Our swing rule on the top is going to be about here. So we're talking just roughly, let's say 33 and 50 bucks. That's not exact, but it's close enough. So if this becomes our cup, which I'm thinking it may be, or form into a flag, then the swing rule is going to put the next top, or the next, not top, but intermediate top, or next move, somewhere around $17 over this. So we're looking at 67, 68 as the next level that we move to. That's just a rough guess, but I'm thinking that's probably going to be the case. If we back out here to the daily, you can see we're finally getting a rounding up situation here in the daily MACD. So we have put in a what I will call a historic low, and it's right here about 175. Close enough. So as I've been pointing out, we're way below any low all the way back into 2007. So that's another reason that this may be a bottom. Combine the volume with the MACD and we may be at a bottom. I have received some criticism and some suggestions. Want to address those real quick. One is the FOFOA article that I've been doing, and I'm not going to do that tonight. I'm going to continue with that until I finish that article because I think it's important to cover it, but I'm not going to do another one tonight. I apologize for not keeping up with updates, but I've been on call, so I've been very busy. The one issue that people have talked about is that people have said, well, you know, it's FOFOA didn't write this article. I understand that, although I have my doubts. Supposedly it's Castada that wrote it, but I have my doubts as to whether or not it's actually FOFOA. The intelligence and the tone of both of them seems very, very close. So if I refer in the future to this person as FOFOA, that's because I think it probably is FOFOA. I wanted to jump over to a interview on SilverSeek. That's a really good site. If any of you haven't visited that site, I suggest you do. It's a really good site because they have the latest silver articles and they stay pretty up to date. They're pretty much on top of latest things that address silver. So it's a great site. But I wanted to read this interview with Jeff Clark and Andy Schectman, and it's about the physical supply bottleneck, and it's some of the points that I've already made about this ongoing bottleneck that we're seeing in physical. Now, a lot of people discount that and say, well, we don't have a shortage, and they go to APMEX and find 100-ounce bars and things like that. But it isn't a shortage in the strictest sense, but it is what I'll call a bottleneck. I've pointed out before that we're trading 1 billion shares or 1 billion contract ounces a day, and just in the COMEX, and I've shown you the math before. It's 5,000 to 1, and I wanted to address some others have said, well, you can't just look at that volume. That's just people buying and selling, and that's a lot of volume. That doesn't really mean anything. Well, it does mean something, because what it means is that 99.99% of the volume on the COMEX isn't silver. It's paper silver. It's people speculating, whether it's the short manipulators trying to speculate the price down, or long paper investors trying to speculate on the price going up. It's not people taking delivery of silver. So the volume is important, and I haven't done the numbers, but I would venture to guess that if you looked at something like oil or the other commodities, at some point I'll do an analysis on those. I don't think you'll see what you see in silver, which is, as Ted Butler has pointed out for years, one, the short position in silver is unlike any other commodity. It's so incredibly large relative to the amount of silver that's produced in a year that there's nothing that can be compared to it. And I suspect that the volume as well, there's nothing that can be compared to it. I don't think you're going to find 5,000 paper barrels of oil traded for every real barrel of oil that is delivered. I strongly doubt that. I don't know what the number is, but I can figure it out. So let's jump into this interview. I heard some disturbing reports about silver supply last month that I felt every investor should know, and while precious metals are currently in correction mode, the long-term concerns with supply won't disappear anytime soon. In an attempt to get a handle on the bullion market, I spoke with Andy Schectman of Miles Franklin, who has contacts that run deep in the industry. What he sees every day might just compel you to count how many ounces you own. Jeff Clark. Andy, tell us about your industry contacts and how you get information you're privy to. Andy, we source our product from 3 of the largest 6 primary U.S. mint distributors. Having 20 years of experience with these sources, as well as the dealers in the secondary market, we're as tied to the industry as anyone. You made some interesting comments to me about supply and premiums. Tell us what you're hearing and seeing in the bullion market right now. I feel as though I'm the boy who cries wolf, or that I've been beating the same drum for too long, but in reality it has been my feeling since late 2007 that ultimately this market will be defined less by the price going parabolic, which I think will ultimately happen, and more by a lack of supply. You see occasional reports that state it's just a lack of refined silver or a lack of silver in investable form. But as far as I'm concerned, there is a major supply deficit issue, and it's getting worse. Take the U.S. Mint, for example. Right now, as we talk, you can barely get Silver Eagles. We're seeing delivery delays of 3 to 4 weeks and premium hikes of $1 or more in the last 3 weeks. Most of the suppliers in the country are reluctant to take large orders on Silver Eagles because they don't know A, when they'll get them, and B, what the premiums will be when they arrive. I was talking to the head of Prudential Beige and asked him about Silver Eagles. He said, as soon as the allocations come in, they're sold out. We can't keep them in. This is coming from one of the largest distributors of U.S. mint products in the country. And this is all occurring in an environment that has only minimal participation by the masses. Few people in this country have ever even held a gold or silver coin. So if it's this difficult to get bullion now, what's it going to be like when it becomes evident to the masses they need to buy? This is what keeps me up at night. Some analysts say it's a bottleneck issue, that the mints have enough stock but just need more time or more workers to fabricate the metal into bars and coins customers want. No, I don't believe that. What business do you know that if they had that much profit potential wouldn't increase production and hire more workers to meet demand? To me, the inefficient model argument is an excuse. Look at what the U.S. Mint alone has done. They haven't made the Platinum Eagle since 2008. They make maybe 1/10 as many gold buffaloes as they do gold eagles. They've made hardly any fractional ounce gold eagles. Heck, they can't even keep up with the demand for the products they do offer. Does that sound like a bottleneck to you? Or is it because there is far more demand than there is available supply? It's pretty clear to me it's the latter. What are you seeing in the secondary market? Are investors selling bullion? There is no secondary market. Absolutely none. Nobody is selling back anything, at least not to us. Think about that. If this was a traditional investment and your portfolio went up 100% in the last year like silver has, you'd think some investors would take some profits and ride the rest out, but nobody's selling anything. This is why I think the lack of supply is the single biggest issue in this market, and in time I think it will become much more obvious. Editor's note, we're using the term secondary market in this instance to mean sellers of bullion and not the scrap market. There are only 5 major mints: US, Canada, South Africa, Austria, and Australia. Yes, there is a Chinese mint and a couple of Swiss mints and some private refiners, but they amount to very little in the overall scheme of things. We're in a situation where the mints are limiting the selection and raising the premiums, and this is occurring at a time when most people own no bullion. As it becomes more apparent that people want bullion instead of paper dollars, I think you'll see premiums go parabolic and supply get even tighter. Are you getting a lot of new buyers to the bullion market? More than ever. One of the interesting things we're seeing is a lot of younger people dipping a toe in the water, buying little bits of silver here and there. We're also seeing bigger orders as well as more frequent phone calls from financial advisors asking us if we can help their clients. So yes, the base is broadening. That's very interesting. So are you seeing more demand for gold or silver right now? 90% of the new business is in silver. And I think that's indicative of the state of the economy. People are trying to get into precious metals, but they think gold is too high. I think they're buying silver because they realize the fundamentals for owning gold also apply to silver. They think the profit potential is better in silver too. This has actually made the supply for gold better than it is for silver right now, and a lot of that has to do with price. Now, I wanted to comment on that. He said the fundamentals for owning gold also apply to silver. That they might think that, but that's not true. It couldn't be more wrong, because the central banks of the world have stockpiled gold. They can dump it on the market anytime they choose to. They don't have any silver to dump. So silver is in a much more bullish situation than gold is. But continuing. Why are premiums fluctuating so frequently? Premiums are almost impossible to gauge right now because the availability of product is getting smaller and smaller and the demand is getting stronger and stronger. Premiums are changing literally overnight, and it doesn't take many large investors around the country to force premiums higher. The net of all this is that it's really hard for us to be able to say what the premium for a specific product will be 2 weeks out. You mentioned increased interest from fund managers. Tell us the kind of comments you're hearing and why they're buying bullion. I think it's coming from their clients. It's my impression that people are taking it upon themselves to study a little bit more, to be more accountable for their assets. And I think they're telling their financial advisors to buy gold. And in some cases, it's because they don't want a paper derivative. It's no secret that financial advisors don't like gold and silver. Once money goes to a bullion dealer, it's not coming back to a stock portfolio anytime soon. So they discredit it. But now it's my impression they're being asked by their clients to buy it. So it's not necessarily because the financial advisor wants gold as much as it's the client requesting it. Here's a good example. There's a firm here in Minneapolis that represents the Pillsbury fortune, and they asked me to talk to their partners about precious metals a few months ago. At the end of the conversation, they said, "Okay, we're going to place an order for one of our clients." Upon hearing it was for one client, I thought it would be in the range of $50,000 to $100,000. Well, the order was for $5 million. There are two astonishing things about this. First, that's twice as big as the largest order I've ever had. It was one order for one client who's brand new to the market. How many more potential buyers are out there like that? Second, they make it abundantly clear to me that it was out of pressure from one of their clients that they sought me out. So clients are increasingly demanding bullion regardless of what their financial advisors say. Hearing about all this new buying might make some think we're near a top in the market. Could this be the case? No. Chuckles. I think Richard Russell says it best. Bull markets die of exhaustion and over-participation. Well, we're nowhere near that point when so few people in this country own gold and silver. Heck, I'm a bullion dealer and most of my peers don't own any gold and silver. Yes, you're seeing more commercials, but there are just as many commercials to buy gold as there are to sell it. I think that's an indication this market is not exhausted. Remember that in the year 2000, everyone and his brother had some NASDAQ shares. That's an example of an exhausted or over-participated market. We're nowhere near that. Where are the best premiums for silver? The very best buy in silver right now is junk silver. And by the way, I think the term junk is unfair. It isn't junk anymore. It used to be junk in the 90s when silver was $3 or $4 an ounce and it was sold basically at melt value and carried no premium. So I'd call 90% dimes and quarters. Anyway, junk silver has the lowest premium right now and in my opinion offers the best potential upside. Next would be 10 and 100 ounce silver bars, and then 1 ounce silver coins, but the Eagles are very expensive at the moment if you can get them. The Austrian Philharmonic has the best value in a 1 ounce silver coin right now, and they're available. But again, premiums for all silver coins are escalating. Gold is not as bad. In fact, I would say that, oh, he asked him about gold. I'm sorry, I missed that. What about gold? Gold is not as bad. In fact, I would say that gold availability is decent right now for 1 ounce coins and bars. There isn't much available in fractionals, and buffalos are still kind of hard to get. Other than that, the 1 ounce coins with decent availability are Canadian maple leafs, Australian kangaroos, and Krugerrands, and they all have decent premiums. So the takeaway of this message is what? First, I think you said it best with your recommendation to accumulate. Not only will it smooth out the volatility in price and premiums you pay, it will give you a bird in the hand if I'm right about this market, and I really believe I am. It will be defined by lack of availability of refined product. To combat that, just accumulate month in and month out and be thankful when you're able to get what you want. Second, it's about the number of ounces you own. You want to get as many ounces as you can without being penny wise and pound foolish. Stick with the most recognized products. Don't buy 1,000 ounce bars, for example, because they're illiquid. You want to maximize your liquidity, and you do that by buying the most common forms of bullion: 1 ounce coins, bars and rounds, 10 and 100 ounce products, and junk silver. Last, keep in mind that premium and commission are two different animals. Commission is what the dealers make on top of their premium. Premium is what the industry bears. So if the U.S. Mint is selling Silver Eagles for $3 over spot to the distributors, that's before they mark up to the public. So even though the premium is high, you're actually going to get most of that back when you sell. Editor's note: it's not uncommon for the buyer to recapture most of the premium when they sell, particularly during periods of high demand. So buy gold and silver while it's available, even if you don't buy it from me, because if I'm right, getting it at all could be your biggest challenge. Thanks for your insights, Andy. We just concluded our KC Summit in the next few years, a truly blockbuster event that included detailed investment recommendations from 35 of the most successful experts. We covered all facets of precious metals, energies, etc., and he gives a promo for his site. So excellent interview. I agree with everything that guy says except for just a couple little points. I think he's dead on. I think you want to stay in the coins. I like the coins more than anything else. The coins buy the bullion mints of the various governments. The Philharmonics are the cheapest. The reason why I don't cover the Philharmonics, I just don't like the coin. But there's nothing wrong with them. They're very recognizable. They're probably the best deal right now in coins. So it may be time to load up, because I suspect he may be right. There may come a time here pretty soon when you just simply can't source any silver. And we're going to be going back up, and quite violently at that point. And we'll talk to you next time.